another day, another downturn. It's fear, right? The story hasn't really changed from yesterday. There's more fear on Deutsche Bank.
Yes, I mean, whenever you hear about clients pulling back, there's two concerns. There's liquidity concern. A lot of analysts have come out and say that concern is overblown. Deutsche Bank has liquidity. It has the ability to tap further liquidity from the ECB, and it has plenty. And even the regulatory measures that measure liquidity take into account some pulling back from clients. The other is the business impact, and that's what John Cryan has warned about. Let's not let these negative news impact our day-to-day business. We saw that earlier in the year where some trading clients pulled back and that hurt their trading revenues.
Right.
I think that's a concern that many analysts have, is what's the impact on the revenue side.
Okay, so Michael, there are two things, right? And as you're saying, first of all, yesterday, late last night, we understood that clients were reducing exposure, and that made the share price nervous, right? Overall, the markets were nervous. And then also John Cryan today sending a memo to staff this morning, and he says, look, it's overblown, it's market sentiment. Does he need to address the issues more head on? Again, he says that the DOJ settlement is not the concern weighing on the prices. Well, it is, isn't it?
It's the ultimate concern is the capital question, and the DOJ settlement is the biggest impetus for that. Until they get a number they can go to the market with, there's not much tangible they can do other than some other moves. We've seen the sale of Abbey Life and some other capital boosting measures, but that DOJ question is the big one, and that will hang over the stock until they get a settlement done.
Okay, Michael Moore, I want you to help me here. We got to back up here, the good reporting of our William Canny, noted by the FT on the cover of the Financial Times this morning. I want to make the distinction, Michael Moore, and I need you to help me here on trust, liquidity, and solvency. Now, to be clear, our reporting is hedge funds who utilize Deutsche Bank's services are going, maybe we don't want to work there. That's different than the deep liquidity market of commercial paper and short-term notes, right?
Yeah, certainly. It's a client issue versus a funding issue. Deutsche Bank has plenty of liquidity reserves to cover, according to their filings, more than 2 months of funding stress. So that's certainly a different issue. And then on the solvency front, certainly we're talking about capital ratios potentially in the case of a large fine going below 10%, that's a lot different than what we were talking about in 2008, where you had banks going below 0%.
Beautifully explained. Why, Michael Moore, and we need to be careful here, why did the stock move so much off William Canny's reporting if it's about a set of hedge funds going, maybe we don't want to do business with Deutsche Bank, versus what you just correctly explained about good liquidity and solid solvency? Why did the stock move?
I think it's a question of confidence and, the potential impact on the business itself. I mean, the fundamental problem for Deutsche Bank is that it has not produced the profits to internally build up its capital buffers. And if you have a further hit to revenue in what is already a weak environment, then that furthers that question of can they build capital internally without having to sell assets or raise it from other means. So I think that's the big question, is the profitability question going forward.